Hello, Fatima and Abdul. Welcome, welcome. Hi, Priyal. Hello, Dr. Vijaya. And now we are
Hello,
going to
Dr. Asli.
have Rishabh, actually. Rishabh was the one who asked us the question. So,
Yes,
Hello.
all thanks to Rishabh for asking us about
I cannot hear you, Dr. Vijay.
index funding. So we have the expert here and welcome kind Vijay ji. So much power because you have accepted and you have, making this lives of our children very beautiful. We are super grateful and thankful to you. God bless you.
Thank
And
you
more power
yourself.
to you.
we have been
Everyone is
speaking
here?
so much about love, Mr. Vijay. Now we have to come to the facts of life.
We are going to talk about money.
Actually, the boys, they said that the acts of service matters. However, we ladies, we like quality time and physical touch. So you see, boys and girls always will differ. So I
Everyone
would
is
like
here?
my fellow friends to introduce themselves, because they are going to be successful entrepreneurs. Two of them already got their companies. Priya going to
That's
be
nice.
estate in all around India, and she wants to grow in Dubai. And then Rishabh, he is also into real estate. He's got the big dreams, and they are very serious about what they are talking about. So I'm going to keep quiet. I would love them to ask questions to you, and thank you so much. God bless you. And of course, we love you. Here is.
Okay, everyone put your cameras on so I can see. Looks like someone else is missing, right? Okay, my name is Vijay. Like you saw my name on the flyer already. What I do is I am a financial market trader. So what I do, I buy and sell financial instruments and commodities. Who was asking question yesterday about indexes? Okay, unmute yourself. Rishabh.
Yes.
Yes, what do you know about indexes?
Um. Like in index funds means if we invest a certain amount every year it doubles, I think.
Okay, this is what they say in India. You invest in stocks, in Ambani stock, Pepsi Cola stock, so your money will double, right? So in
Like index
reality,
funds is like compound interest and like.
okay, so this is what you learn or what you saw somewhere. What I'm going to do, I'm going to explain what are indexes, especially in India. One second, where is my? Okay. So if you go on Yahoo Finance, you see my screen?
Right now we see. Okay, now we see.
Okay, Yahoo Finance. So basically indices, whatever we can call it, there are different names we call it. So indices, it's a basket of stocks, which is like in India, it is Nifty. So if you Google here, Bank Nifty, it is Mumbai Stock Exchange, top 50 companies traded under that. It's like this. So you will see this is an index which is covering almost 50 companies.
It's like a graph, the
Yeah,
stocks of the
so
company.
this graph, it is what we read. It is called candlesticks. You see, these are like candles. The candles that we have at home, it is the same. Basically, it came from the Japanese mathematical formula.
These indicate the profit and loss of
No,
the
what it indicates is each candle here is 1 day. So today the market is going up here. One second. today's market is here. So this is today's candle. Yesterday was here. Day before was here. And then on Monday it was here. So Monday what happened? Market went down from here to here. Market went down. So
So
today
if
we are
some
going. Today we are going
even
up.
if someone had invested on that yeah, if someone had invested on like 3 days ago on that when it was decreasing, they would have gained profit by like today.
Exactly. See what traders do on a daily basis or on a weekly basis or on longer term, months, years, or even quarterly. It depends how they are trading. Let's say if I was trading this today, I would buy here and then evening I will close here. So I'll make this much of money, which is almost 5% of what I invested. But if we look here, what happened on what is the day? Last month. So stock was here, it fell down. This was due to the news that Adani in Dubai, in India, made a big loss. So what happened? All the companies suffered the same loss. But basically, what we do, we trade multiple indices, which you can name it as Nasdaq. I will go back on this one. I'll show you one by one. So if we go to Nasdaq, Nasdaq is 100 companies of America. One second. So Nasdaq is one index in US. So it represents 100 companies within the US market. See here also the market is going up now today because today is a news that came out. So this is happening here. But in indices, it's not that we invest and money will double or it will keep growing. No, there is nothing like that. So
The value will increase.
So what happens is in financial market, we have to follow when the market is going down or when it is going up. Like this, we know. So what we do, we sell here up to here, and then from here we can buy it up again. So it's a process. Sometimes we buy, sometimes we sell. It all depends what we are looking at. Any indices. So this was Nifty, Nasdaq. Now I'm going to show you another one, which is SPX. We call it S&P 500. That is top 500 companies of US also. Yes, they call it US 500. Okay, here. This is another index for another 500 companies within the US market. So what just happened today is like this. Once again. Normally, I got some tools, but now I am showing you on Yahoo Finance, which is easier for you guys. Somehow it is not showing, I don't know. Okay, anyway. Like what we said earlier, let's say Nasdaq. Okay, Nasdaq got 100 companies here. 1 to 100. So whatever companies you may have heard, so like Netflix, Apple, Google, Pepsi Cola, all these companies are listed to the one index called Nasdaq. So if we open Apple now, this is Apple chart. on a daily basis. So we are looking at the candles. So this is what is happening with Apple. If you invested here, like you said earlier, down here, so you keep it for several days. This is like almost 2 months time. So if you bought Apple at 125, today it is at 160, you can sell it to make profit. See what happened here, people are selling, that's why market is going down. Again, when it comes somewhere here, people will buy again. So basically, what happens is once you invest in a stock, you need to check where the stock is. But indices, you are going to trade it. You don't invest in indexes, you trade it. So you buy and sell. I'm going to give you two websites. So one is Yahoo Finance. In that, you can write any company, any index. You can open it. You will have information about that index, what's happening on day-to-day basis. You can have a look. And then there is another one. Write this one. It's called Sleek Charts. Write it down. sleekcharts.com. So here, what you do, you just type what you want to look. You see here, S&P is here, Nasdaq is here, Dow Jones and other assets are here. So you click on it, companies, it will show you all the companies again. So Apple was in Nasdaq, it is here also. So we can open Microsoft, for example, for this time. So this is Apple, Microsoft stock. You see, it goes up, it comes down, it goes up, it goes down, it goes up again. Each candle here, green or red, whatever, doesn't matter. Green means it's going up, red is going down. So this candle is when the market is open, like now US just open now. So here, now the market is going down. And then evening it will close. It may close here, it may close here, we don't know. No one knows when the market will close where. This is the market behavior. Some people may tell you, you know, I know the market will close this price, that price. That is unknown. No one knows. Secondly, that was a good question, that you invest money and the money will become like double, triple, all this. But there is a lot of risk associated to stock market. Let's say, for example, here. Let's say, for example, let's say yesterday someone woke up, said, okay, I will buy here. And then today, next day morning, he wake up, he sees a stock here. What happened? He lost this much of money. So if he invested 1,000, let's say, maybe his money is left only 100. But a clever investor, what he will do, he will start selling from here. So he will keep on selling up to here. Or if he was sleeping next morning, he will close here. So this one is his profit. So here, if he invested 100, so he can make, let's say, 1,000.
So, sir, when the candle, the green candle, is going up, we can sell, which we can earn the profit. And when it's going down, it's cheap, and then we should buy at the right time when it's going to go up.
Basically, this is what we will do later on if you guys are joining my classes. Okay, I've got classes for kids also. So what we do, let's say we understand, we found the news that Apple or Microsoft, whatever is it, it is falling. Okay, let's say market was here. We need to start learning how to read these candlesticks. So before investing, there is a book that we have to read all. So each candlestick has a meaning here. You see, the first one was totally red. Before that, it was green, but on top there was no tail. So the candle was like this. The top was missing, right? And then we had a red one like this. It had a tail on both sides. Then here, the third candle. Let me show you here. This candle. It came like this, which means there was an indecision in the market on that day. What happened is market behaves like this. I will draw you the candle, how it works. So your candle basically it opens, as it goes down. So we had a high. You can see my drawing, right?
I think it is frozen, Mr. Vijay.
Frozen?
It's stuck, I think. The cursor stuck in a place.
Okay, let
It
me
is
go to
stuck
this.
in. Okay, now
Okay,
it's
let me
okay.
go
I
to
think.
this one. This one
It's
got
not
a
okay.
pen. Okay, wait.
Now we can see. Okay.
Okay, wait. This one got a pen, so it will be easier.
Okay. So this is your love language, Mr. Vijay. You can understand.
Zoom is a bit slow these days, huh?
Looks like a little bit slow, but now we can see it. Abdul, Fatima, how do you see it? Do you see clear?
It's not opening for some reason.
We can see the screen clearly.
Now you can see
Okay.
the candles here.
Yeah.
So basically what happens is a candle when it opens, it's the green one, okay? It starts from bottom, it goes up, and then it closes here. But before going up, it goes down also. So we have 4 stages in a candle, which is open, high, low, and close. This is how we are going to read the candles in the future. So today market example, it opened here. Okay, it went high, but we don't have the low yet. So it is still going down. Then it will go to the lowest point, which is creating this tail down. And then it close a bit higher. So that will be the day close. Any red candle means market is dropping. Any green candle means market is going up. So let's say, for instance, you are investing. Let's say you are an investor. Okay, today you look at the market. Let's say your expectation is like this. I'll put a red color. Okay, you expect market to go down here within couple of days. So candles will open here, candles will open here, market will go down. You will say, I will buy here. Once you buy there, you expect market to grow up to the last price, which was 275. So basically, if you bought one share here at 245 and you sell it at 230, 275, you will make this much of profit, which is like $40 per share. So if you buy 100 shares, you will get $40 multiplied by 100 shares. On the reverse side, if you sell it from here, same, you sell, you go down, go down. So this is your part of profit. But if you say, okay, I'm selling here, market goes up, then you lose your money that you invested. So what we do basically, we don't invest all the money in one share. What we do is we split the risk in multiple shares, multiple companies, and before investing in any company, we look at the company financials, profit, how it is developing past 10 years, 5 years, like this. So gradually, this is what you're going to do. It's not just, okay, we like one company, we just go buy. For example, last week, if you saw news in India, everyone was talking about Adani, right? So whoever was in these stocks, they lost their money. But basically, some people made money also because they started buying when the stock was cheap. So not everyone is losing money, not everyone is making money. So to understand that, it is very important that we understand how the market is behaving. On top of this, there is one secret I will tell you. There is 7.5 trillion dollars traded every day. So there is money enough for everyone. Not billion, this is trillion. Trillion got 9 zeros. This is the total financial market traded daily, not 1 month. And total market size, if you Google, you will see it is $93.5 trillion. So this is a total amount of money that is traded in financial markets every year, every day, 5 days a week, and almost 24 hours. How old are you, Rishabh? How old are you?
I'm 30. I'm 14. I turned 14.
14. Good. Early learning is good. So once you start learning, and then maybe after 2 years, you can start investing.
So hmm, um, what are some good books for investing and compound interest and
I will share one e-book later on. Mr. Asli will send you guys. So it is about candlestick. So we start first from the beginning. So how to read market, it is very important because now, example, if I explain much on all this, okay, all of you will say, okay, what is this bar? What is that bar? What is this? What is that? Because you don't know, it is like learning ABCD in kindergarten, right? So we are going to start with the ABCD of the market. So what are candlesticks? And each candlestick here got a name. Example, this one is a reverse hammer. This one is a hanging man. And we got a hammer here. So all of these got names. So for you to identify it, it's like reading Chinese now. You will not understand. I'll give you the book. You guys read it. You don't need to read all of it, but part of it. Then next class, when we will do, maybe in a couple of days, I will speak to you guys again. Then we are going to do in details about candlestick, how to read it in market. So if you go on Yahoo Finance example, you can open. Tell me one company that you know famous. Any company, Pepsi Cola, Coca-Cola, whatever.
Nestle. Nestle.
Say again?
Nestle. Nestle. The food company.
How you write that? How you write?
Yes.
You said Nestle?
Nestle.
Yes, Nestle, the food company.
Okay, Nestle.
Nestle.
Okay. Okay, now example, food company, Nestle. I'm going to open the chart. Your voice was breaking. So this is a Nestle chart on a daily basis. Okay. happened to my chart?
So Abdul Rahim, you are also into mathematics. Fatima Priyai, you are all listening and understanding, right? Abdul Rahim, I know that you are also interested in candles, abacus. So how do you
Abacus,
feel about
interesting,
this? Huh? I love that. Thumbs up.
Okay, so Nestle is trading at $117 today. Let's see on the chart what happened in a couple of days. Chart is not available. Okay,
The internet is quite slow. I think the problem is that.
normally shouldn't.
No, it is coming. For example, so here it writes previous close. Open, close, and you mean this ones? This is what we can see.
Okay, wait.
Okay. So Rishabh, we'll see now if on Monday he invested in Nestle. So today, how much money he makes.
Okay, Nestle is it's like this now. Today Nestle is going up, right?
Food, it's Nestle is a food brand, right? Like, so food brands always have a high stock.
Yes, exactly. See, food is one sector. So when you're trading, so what you're going to do is you're going to look at the sectors. There is pharmaceutical sectors, food sectors, energy sectors, transportation, which is Airbus and Boeing companies, example, train companies, petrol companies. So according to the sector, we trade. So food, like food, every day people eat.
Yes.
So
Like
you
the
got
daily
Nestle,
necessities. Brands that supply daily needs have a higher stock rate.
exactly. So like example, food is consumed on a high number on a daily basis. So food prices tend to go up all the time. Like now, I will tell you one thing, that gas, natural gas, since last year, it's going down. Normally, it should go up, basically, but what happened is because of the war in Ukraine and Russia, so natural gas price dropped from $6 or $8 to $1.2. That is something that happens also in the market due to geopolitical fundamentals and lot of effects on the market.
Economic crisis.
Exactly. That is economic crisis, geopolitical, and all this all the same. So
So
similarly,
Mr. Vijay, we can say that a good trader must read, listen, and write a lot, right? Because it is just you spend so much time on checking the markets, going back, going forth. It's not just, looking couple of candles, but it's all about reading, investigating, concentrating, dedication.
exactly, a trader, once you are a trader, you will be reading a lot. I read almost 14 newspapers every morning. I will listen to news almost 10 hours per day, and I read a lot of articles on Yahoo Finance, on MSN Money, and I got other websites that I will show you later on. So you need to follow news, what is happening in the world. And accordingly, you pick your sector. Once you pick your sector, under one sector, there is a basket of companies. Okay, one is Nestle, other one is, example, McDonald's, Domino's, Burger King, and you got Pepsi Cola. In India, you got Ambani companies, which is Reliance Food and all. All these are companies that are traded on the stock exchange. So you can buy and sell any company, or you can pick a specific company that you like. Example, me, I like Netflix because I watch Netflix. So I trade Netflix sometimes. Lastly, I bought, it was cheap. Now Netflix is high. Twitter, you're on what is that the one? Facebook stocks also. So a lot of stocks can be traded, can be bought, can be sold, but you need to know what is the right time of buying and what is the right time of selling also. Nice.
We have to predict when the chart will go up and down. Then we'll get the profit margins.
Financial market is a game of probability. It's not gambling, it's probability. So according to what the news information we have, we predict the next move of the market. Sometimes we go on a long-term trade, which means we buy and we keep it for 6 months, 1 year, and then after that we take our profit. Sometimes we make a short-term trade, which is 1 week or 10 days, 15 days. We take our money, we okay, buy, finish. But there is lot of assets, lot of instruments to trade. It's more than 15,000. So there is enough to trade. Sometimes, example, today, Apple stock is not good to trade. So I leave Apple on the side. I look at another stock. But how we are going to go through the 10, 15,000 companies or stocks, we don't need to look each and every one. We get tools for that. So we call it.
We can also see the for example, people use notebooks a lot. Like that notebook brand ITC class work something will be there. In that also we can stocks we can buy which is necessary for human which is necessary for humans that's what we have to buy for stocks
Yes,
for daily life.
Example, 10 days back, looks like, 10 days around, Samsung released a new phone. So just 1 day before the release, the stock price of Samsung went up because it is launching a new product. So that is in electronics part technology. So that falls under the sector of technology and equipments. So you need to pick the sectors, like I said. So each sector has a basket of stocks. Me, I like to trade Nasdaq because it is a mix of technology and other companies, which is the top 100 companies. Why I like Nasdaq? Because it is a basket of 100 companies, not one company, which means all the 100 companies cannot go down at the same time, right? Because these are 100 biggest companies, not any 100 companies. So it is 100 biggest companies in USA, which is almost $5 trillion basket. So according to my research, my analysis, I know that these 100 companies cannot go down at the same time. Let's say one company one day is not good for them, their stock is down, but 99 companies are going up most of the time. Sometimes because of news. Now, let's say, what was the news? News in the sense of interest hike. They raise the interest rate in the banks. Inflation, housing costs, and utility costs. All these sometimes every 3 months they revise the price. Like yesterday, there was a raise in interest rate in the US. So today, what happened is most of the stocks started moving up and down. Nasdaq started moving up. Yeah, today Nasdaq is up almost, I will tell you now, almost 2.5%. Yeah, 2.5%. So in 1 day, you can make 2.5%. Let's say you invested $1,000, 2.5% out of it. It's in 1 day. Whereas if you leave your money in the bank, in 1 year, you will not get 2.5%. What happens is when you keep money in the bank, we lose money. So we need to make our money work for us. So while we are sleeping at home, our money is making more money. Right? Any question?
Yeah, make your money work for you. Thank you. Abdurrahim, you have any question? Fatima, Abdurrahim, Priyal?
No.
I'm going to send the book when you guys have time. You read it slowly. And then next time when we will have the next class, you guys will understand a bit more about the financial market.
Sir, which indicator and broker do you suggest for Indian market?
Indian market.
Yes, sir.
See, in India, I don't trade Nifty. Nifty is a major index in India. Indicators comes afterwards. After you understand the market, there is a lot of indicators. There is more than 100 on the market. But what we use the most is RSI. RSI stands for Relative Strength Index. So how it works is, I will show you something.
You said ready stock index.
No, RSI. Relative Strength Indicator. So it's like this. It's RSI. See my drawing on the screen? If you Google RSI, it will show you Relative Strength Index. So it is like this. I will draw it down. Next time we will open the indicator. So the indicator basically works like this. It goes up and down. So what is it is when it is here, we don't do anything. When it starts moving, we start buying from here. We keep our trade here. Once it touches the next line, so this line is minus 100. This line is 100 plus, and here in the middle we got 50. So it goes up here, we close our trade, we wait for it. Once it starts going down, we start selling till it goes down again. Some people use it blindly, but we don't use it blindly because it is not 100% accurate. So you have to do a lot of research rather than just following one indicator, because if the indicator is doing like this example, let me see one thing. RSI, okay. Let's say you see it going like this and then it's doing like this. So what you will do in this situation? There is no decision here, right? But in the market, we can still have trades in and out here, smaller trades that we can do. But if we depend wholly on the indicator, we will not be able to see the trades. Apart from that, there is lots of other indicators that can be used. I will show you later on. But indicator is the last. That one, I don't like it too much. You know, indicators, they are like, how you call it, the cheat book. So first we learn it ourselves. We learn to drive properly.